We're going to jump it over to our man, Teddy Kekstadt. Folks, we talk to Teddy every Wednesday at 40 past the hour. You can check out Teddy's outstanding Tiger Forex Report right on the front page of TFNN. Hit that newsletter tab. You can sign up, folks. It's $97 a month. Comes with a 30-day money-back guarantee. You get a webinar in there as well. And don't forget, right under the services tab, he's got a couple of great webinars, Japanese candlestick pattern stock and option strategies, as well as capitalizing on time with calendar stock option spreads. Both of those, $97. You gain access to the webinar. You can watch it as many times as you like. And, man, it seems like we always got great days to talk to Teddy. Teddy Kekstadt. Hey, how about those Florida Panthers, baby?
I know. How about it, huh?
Oof, I love good hockey, man, and no matter what, that was a great series. Some great hockey, and you got to love the Florida, Tampa, and I was talking to a buddy today, Teddy, and it's amazing how streaks can occur. The Canada hasn't won the Cup since '93, the Canadians, and I was looking at it, and prior to '93, Canada, it was the Canadians, it was the Maple Leafs, it was the Calgary Flames, they won it 12 out of the 18 prior years. Going into '93, and then they don't win it for 32 years. Streaks are amazing, man, but we're on a good streak right now. Nonetheless, we bring it back to the market, man. It's Fed Day. All indications are they're going to keep it where it is, but we got a lot going on in this market between crude, the Middle East, and the dollar and the Fed. Where do you want to kick things off, Teddy?
Yeah, the Fed, I think, is a total non-event day. It's not. We were already talking about this, over the past couple of weeks that markets are probably going to be range-bound heading into it, and it's most likely going to be a non-event. And I think that, right now, I would say I'm going to stick with what I said, over the past couple months, that I don't see them doing a rate cut until at least the end of the summer or the fall. So I think that the a half point is, I think Powell's going to definitely pull the trigger on that. But like I said, I don't really see it happening until probably the middle, of the third quarter, definitely or towards even the fourth quarter, if you will. So especially right now, when you have crude oil rallying, you have a rally going on in a lot of commodities actually, which means that inflation is going to be brewing no matter what. That's just a physical function of the markets. So unless it's a spike. So, crude, markets usually go out like they come in. We have a very accelerated rally in crude right now. If you look at just on a daily basis, even the ranges that we've had over the past few sessions, that's high volatility. That's going to die down eventually, no matter even if things don't de-escalate in the Middle East. So the question is are they sustainable at those levels? And I think that, could we still go higher? Absolutely. I would say that on a bullish perspective, we could even get as high as $82 a barrel. But I don't think that's going to take all summer. If we actually are going to get a big rally, an extended rally, I think it's going to happen in a very short amount of time, that it will manifest over the next 2 to 3 weeks. And then after it hits that area, I don't think it's sustainable at that price. I would see it coming back at least to where it's trading right now, around the $72 to $70 range. And then if things de-escalate and what have you, well, then it goes, back towards the $60, $65 area or something. You got to remember, right now the world is looking at it, especially with what happened and what's going on in Iran. The only thing is that oil supply really doesn't impact anything where U.S. oil goes. So, or even the majority of the countries that are, obviously import oil. So what it does impact is China. So China is actually the biggest, recipient of a blow from what's going on with Iran. So I'm not really too concerned about, China's inability to get as much oil, because all you have to do now is they're going to have to go to the open market. So, okay. And another thing that this also does is you got to remember the whole thing with BRICS too. So this means that China also is going to have to purchase more oil in American dollars. So it forces them to do that. So that's probably why you're seeing an uptick in strength in the U.S. dollar while you have yields retreating. I think there's going to be a global demand, because right now, if even in the short run, no matter what, it's going to have an impact on, where Iranian oil went. Other oil is going to now, take its place. And most of that is denominated in US dollars. So that's probably where you're getting a little fundamental strength, I would think, on a commodity basis. And it's probably going to be short-lived. I wouldn't look at, like I said, I don't think it's going to be sustainable for any really extended amount of time. But over the next couple of months, I think it is going to be a factor. So, yeah. I mean, we do, right, like we said, you and I both agree there's probably not going to be a rate cut today. So as far as dollar strength being in the cards, right now it's kind of bullish to dollar, but if we're only going to get, a half a point out of Powell, it's pretty much factored into the market already. So now we're leaning more on the next Fed chairman. So now we're looking at a year from now before you're going to start to see any real significant rate cuts, So a half a point between now and May is not that big. It's not really going to change anything where we're at. So I think you're going to see you see some nice swings in the interest rate markets over the next 12 months actually, but I don't think you're going to see any major trend emerge until we get closer, especially once Powell does pull the trigger. And if he pulls the trigger in September as a half a point, well, now we know we're not getting any type of rate cut, at least until May. So that's something you're going to be able to factor on with the markets. So, and the market's commanding higher yields as it is. So that's something I think people have to be mindful of, and I think that's one direction you can kind of lean on fundamentally. But I wouldn't expect any major trends. So, and this is something we have to kind of get used to. I mean, I don't like range-bound markets, especially with what we're experiencing over the past, month and a half. I mean, even in the Tiger Forex Report, nobody wants to hear, he's saying it's range-bound again. Well, okay, you look at the chart of the New Zealand dollar and the Australian dollar over the past 4 months, it's sideways. It's not going anywhere. And if you look at the other markets, if you expand out your time horizon, you start to look at it, you start to see that these charts like this are actually going like this. So I mean, and this is the reality of things. You have to be mindful. Like, I'm very fortunate that I don't just trade currencies. I trade futures, I trade options, so there's always an opportunity somewhere. But now I'm actually looking at more opportunities elsewhere because I know there is no trend to jump on for the currencies. None. Or the dollar or interest rates whatsoever. It's just a matter of picking points and moments. And, that's why I'm very big now on wait for your valid signals. Take your most, where you have the highest probability of whether you're getting long or short, and keep your perspective. Don't be expecting any major trends. Pick your target levels, keep your money management very tight, because otherwise you're just going to chop yourself up. You're really going to spin your wheels. You're going to make some, you're going to lose some, and net you're just going to be frustrated.
Sometimes that's the best advice, man. Sit on your hands, folks. Have a little patience and let it come to you. Teddy, I appreciate the interview so much as always, man. You have yourself a great week. We'll talk to you next Wednesday, brother.
Thanks, Tommy. Take care.
Thanks, Teddy. Stay tuned, folks. We'll be right back.